All right, guys. So welcome. I wasn't able to hop on any webinars, or we weren't really able to hop on webinars for the past few days. We've been trying to get things uploaded, especially for the course. It took a little bit longer because we decided to add like 20 extra videos to the actual course, so it took a little bit longer. So for this webinar, I'm just going to go over like normal. It's good with you, man. Okay, I'll go over that. I'm gonna just go over a few pairs first, and then I'm just gonna give you the breakdown of the overall website, what to expect, and what's pretty much on it, especially for the people that's new or the people that's have some experience, so you guys can know what to expect. All right, what's all this extra stuff? All right, so the first pair I'm gonna look at is the DXY, and I really just want to start off with this just to give perspective because we still have NFP to end the week since it's already Wednesday, about to be Thursday. All right, so looking at the dollar index, you can if you just look at like key levels, you can clearly see what's going on, but overall you can like this is still in consolidation. That's why it's not as clear. So overall, the most important thing for me with this is going to be this high right here, because this is the most recent price action that we have within this consolidation. So unless the market is just trying to like plant a trap, that's the only way that I wouldn't pay attention to this. But because we're in this type of range and we have high impact news, I have to take whatever the market is giving me so far and use that to my advantage unless the market shows me something otherwise. So in this case, the market came down to this support level right here and then pushed up and made a high. When it pushed back down, it made somewhat of a higher low. But when it pushed back up, it fell to make a higher high. So when it pushes back down, because it fell to make a higher high, in order for this to be a strong, valid uptrend with momentum, when this comes down, it would need to stay above the previous low. In this case, it pushed below the previous low. So looking at it from the bottom perspective, you had a high, price pushed down, made a new low, and then when it pushed up, it didn't make a high, and then when it pushed down, it broke the low, and then pushed up. So we're still in consolidation, but overall, you could possibly see the market form a lower high from around this point, or you're going to see the market just straight shoot up and break above that resistance level. So whenever the market shows its hand and gives us like a clear idea of what it's overall trying to do, that's when you can kind of get a lot more aggressive if you aren't already in a position. So for me, let me see. Okay, so this push, rejection, push up, failed to break highs. When it pushed down, it broke lows. So now you could see something like this happen where it drops, pushes down, and then comes down to this low. Or you're going to see the market break above that level. You're going to see the market break above this level right here. If it breaks above these two previous resistance levels, then we know that more than likely we have a dollar strength. So then you would just wait for the break, retest, get it on a buy at this position, and then look to take it to the upside. And it's more than likely, if it does break this structure, it's good because then it's easy to spot where it's more than likely going to come to this level right here. And I mean, like, if you're a smart trader, like, yeah, you could take the buy here and ride it up to this level. But sometimes, like, the market isn't going to paint and it's not going to make the moves be as noticeable or to where anybody could catch the trade. So for me, sometimes when I know that things look a little bit too noticeable, I'll take my buy here and I'll probably close my position 20 pips before it actually hits that level, just so I don't have to deal with all the BS the market likes to do with fluctuations. Because that's really how they get people to be like erratic, is throughout all the fluctuations. This market is a lot smarter than what you think. So it'll move price to a level to where it looks favorable for the bulls and the bears. That way you have a lot of winners and losers. You see what I'm saying? But it'll more so try to manipulate the people who are like have majority of whatever position. So if you have 80% of the of retail traders that are long on a dollar index without a clear trend, and they're just like in the trade, then more than likely that's when you would see a stop hunt to the downside. They mess up those people who are playing it too tight in the long position. That way they don't let everybody win that one position, because it's all about pretty much the market trying to entice you to make the wrong move. That's really what the market is like. That's all the market is trying to do, entice you to where you're placing a position that's in the wrong direction of where the market is trying to go. As a retail trader and as somebody who's trying to, be profitable, you have to get around what the market is trying to do and just more so focus on less noise and try to find the actual structure within the market. So that's why what I'm saying, when the market, if it breaks above this level, we automatically know on the pullback you can ride it to the upside, and that's going to be an easy buy. But now if it breaks to the downside, you look to sell it, and then overall it may not come back down to these lows, but you would expect it to come back down to at least like 975, 97 support level overall. All right, so that's DXY. Let me see. Oh, this is Brandon. Audience D, yeah, so I'll go over that real quick. Man, I don't know where you at, but you like Audience ZD? This is probably one of the pairs I hate the most. It's only because like when I first started, I didn't really know exactly what was going on, and I accidentally bought when the spreads were high. So I started off down $800 like right when I entered the trade, and that's probably like the only reason. It's because the spreads are ugly for me with NZD pairs. But in this case, I mean, overall the market looks more bullish than bearish. If you just look at it on the weekly chart, after the market found like, all right, hold on. So let me just draw this out, map this out. So you have this support level right here. So overall, when the market broke below right here, when the market broke below down here, the market was heavily bearish. But we expected it to push up, find resistance here, and continue. The fact that it broke above signals that the bears they don't have as much momentum just yet. The fact that it kept pushing up, this would have been the next area that it found resistance. And then it didn't find resistance there. It pushed up above that. And then if you look, the most recent lower high that would have been right here, the market also pushed up above that. So now if we get a pullback, this could be a support level. Don't get me wrong, like it could pull down lower, but this is how I'm able to find sometimes when the market doesn't make those steep retracements that most people expect them to do, because the market is already moving so heavily with bullish or bearish momentum that whatever side is against the overall momentum, they're not going to have enough strength to actually make a deeper pullback. So that's really all that's going on. So in this case, you would need to see if the market is trying to push down. If it does push down and it finds support, we're going to look for buys. But if you see like news gives this like a strong bearish candle, then you would just wait for the market to show more confirmation of where it's actually trying to go. But I don't like to buy against selling pressure. I don't like to sell against buying pressure. So it doesn't mean that I can't buy when the market is dropping. It means that if the market is showing me a heavily bearish or bullish candle, I can't buy or sell against it. But now, like, you could clearly like see when the market is going to make a retracement. So like, for example, when the market pushed up to this level and then came back down, it pushed down to previous support. But because you had like this wick candle, like price didn't close down here and you had that wick, it kind of let you know that the market had potential to push up. In this case over here, when the market came down here, you had a strong bearish engulfing candle, and then the market pushed up. So after that bearish engulfing candle, I can't buy, regardless if the market goes up, because that's buying against momentum. You would need more confirmations to actually buy. In this case, the market did round out and find support, but it more so looked in favor of the bearish sentiment because you had a break below support, and then you had 3 weekly candles that all pushed up and couldn't close above it, and then finally you had that break above. So with that, you're looking for the market to possibly round out, push down, find a retracement level, and then possibly go up. And you could possibly look at this as somewhat like a inverted head and shoulders. It might not be one, but it could possibly play out one, as for this being the leg, this being the shoulder, to the neckline, to the head. And if this pulls down, this would possibly make the right shoulder before possibly going higher. Overall, that's the type of move that I would like to see with this pair. I mean, if, like I said, the news comes out and gives you a strong bearish candle, then I might have to just change my bias. But just looking at it right now, because the move is already extended, so I wouldn't look for buys here, and it's risky to sell because you still have economics coming out. I would like to see a move like that happen and then ride the buys. All right, so yep, that's all density. Hopefully that answered what you were looking for. All right, so I had sent out this week. Let me just go over some of the pairs that I had sent out earlier this week if you're in the VIP group. So the first pair that I sent out was EJ, and I was looking to see if EJ could hold above 116, and it couldn't. But overall, like, it's clearly been in a downtrend. I just wanted to see it push up and hit possibly like 117, 118. But when it pushed up, we had a clear evening star type candle reversal right here on the daily chart. And that's what led to the previous 3 days of drop. So once the market broke below this support, like, it was clearly in a bearish structure. And then with this, like, a lot of people think it's risky to sell after this break, but sometimes this still is a good setup and it's good confirmation, because let me just show you a little secret of detail that I like. So, especially because this led to a break, like, oh my goodness, this is crazy, and it's on the daily chart. All right, so with this break right here, because you do not see any wick at the bottom, it's showing you that there's still so much momentum behind this. So not to say that it's a lot of momentum behind it, but it means like the market can still drop lower, because you had the evening star type reversal, bearish engulfing. The next candle gave you a bearish engulfing, and it broke support, pushed past support. But the bottom of this bearish candle, there's no wick. So when you see something like this aligning with like key breaks, it's showing you that momentum is still possibly going to go in that direction. It just, like, you can't overextend the move, but you can ride it down a little bit lower more than likely. Just like how after that bearish candle, the next candle, it would have pushed up, retested the breakout of support, now acting as resistance. You could have sold there, stop losses 15, 20 pips to the high, and then overall the market ended up dropping almost 100 pips to the downside. Or it did drop 100 more pips to the downside. All right, so looking just to see, this is around 115.5. Actually, it's around 115.6. If you just see overall when the market dropped, even when you're late in the trade, over 100 pips, it dropped. This is being late in the trade, but because the market is still breaking structure, candles are still closing with momentum, you're still able to ride the trade without guessing if the market still has momentum. That's how you're able to see if the market still has momentum in that direction. So now that the fact that we have that break, it's clear that if we stay within this bearish trend, we will be looking for some type of a pullback. So the market could pull back up to that same resistance point that we were just talking about. So the market could easily just push up to this level right here and then make new lows from there, or you could see it push up higher and repeat those previous levels that got broken out of. So those previous levels would come in. Oops, hold on. So yeah, those previous levels, if it broke above this resistance, the next level would be that next level of resistance right here ish. So this would be around closer to 116 resistance. So now I was looking for price to hold above 116. Now on the retest, if it stays below, then we're still bearish because that 116 level it's been key just because of mainly, I mean, what happened in the past, but for most recently, this action right here all was around the 116 level. So that's why it's key to break or break. Every time it rejected, it pushed up, and then when it broke, it came back lower. All right. So that's EJ. What other pair? GBP Jappy. It's probably in similar type of momentum. Yeah, so this trend line had to break, and then ever since the break of the trend line, the market has been dropping. Let me just go down to the 4 hour. So the market, this trend line was drawn from this point to that point, and then the market ended up breaking below, which would have been a false break because right after it spiked, it pushed up. So I remember I had called the sell on this, and the market ended up dropping. But I remember when the 4 hour candle closed like this, and I was like, yeah, this it's about to push back up because this type of closure just doesn't give me confidence that the market still wants to go up without retracement, without pushing up one more time. So this right here, this candle, how this looks, this is signaling clear bullish momentum, and this would have been like a head and shoulders with the candles. I mean, with the wicks, this would have been shoulder, the wick, head, right shoulder. The market pushed up, retested right here, and then broke above. When it broke above, it finally came above the resistance and broke above the 50 EMA. On that very next candle, it pushed down and retested the 50 EMA. That would have been your buy, and then that would have led to a strong bullish engulfing candle that pushed price up like 200 pips in 4 hours, within 4 hours. So something like that, I mean, that would have been a clean trade, but more so where we're at right now. That's just like the overall of what's going on with what went on with the market because it's good to kind of figure out what happened within the market to see like the overall momentum and see what was like how the closes was happened to trick buyers and sellers and then try to do your analysis of what's going on right now. So right now you can clearly see that the market has been heavily bearish after it broke this low. This support right here was broken. So now if price rounds out and finds support at this level right here, that level that level of resistance would be the first level that we see that could potentially get hit for a retest like that. If that's broken, then we're pushing up higher to this level. And this level is important because this is where the body's closed there, and also you had a breakout retest there. So this is why that level is a key is vital. So if we do get momentum, we're going to push up to this level first, and then the next level second, and then more than likely we'll look for the continuation unless you see price breaking structure. In this case, the momentum is heavily bearish, so you would just ride the trend until price actually showed you otherwise an invalidated structure. All right, what other pair? USD Chef. I sent the signal out. This trade ended up being a loser. I think it was negative 50 pips, but like I'm still confident it's going to drop. It's just it could push up one more time because I'm seeing it from a different perspective right now. All right, so let me see. All right, so even with this structure, there's like discrete even divergence within this, but aside from that, the structure is still valid. Like, yeah, the market pushed above this wick, but this wick right here was never the true lower high anyway. Like, so that's why it doesn't really matter. More so, um, yeah. If you have a question, just write it in the chat and I'll go over it, or Brandon will answer it. So this resistance right here is the real key lower high. So as long as price is staying below that, we still have a chance to drop lower. But even if it broke above that, more so these levels right here are what are important for the bears to still have a possibility to drop lower. Now, if this resistance right here up here gets broken, then overall the bulls are in full control because they just took out multiple levels after the market just went heavily bearish. And then even if you look at the weekly, you can clearly see like multiple rejections within that same area of 0.98. So if that level finally gets broken, then we're more than likely coming to 0.99. But if we hold, you can see this drop like 200 pips possibly. All right, so the market pushed up once here. It pushed up twice there. Mind you, these are all rejections of the 50 EMA too. Pushed up a third time, rejection, fourth time, rejection. So now we're still below that whole resistance level. So we're just going to call this resistance level the 0.98 level, 0.98 resistance level. So as long as the market is staying below that, we can still have a potential to drop. Overall, we would need to see the market drop below 0.97 to have confidence that the bears can gain momentum, like real momentum. So if the market holds below 0.98 and you see a drop, the market drops below 0.97 and just say we get a retest and then wants to stay below 0.97, then more than likely you're going to see the market drop to 0.96 and possibly 0.95. And if it breaks above 0.98, then and you get a retest, or even if you don't get a retest, more than likely I would more than likely see the market come into 0.99 if you get a break at that level. Because that just means these resistance level would need to get met. All right. All right, Cash Chef. Let me just finish. I'm gonna use. GBP Chef because that's the other pair that I went over. The signal still should be active. I mean, shit, it's 14 pips from or 17 pips from TP2, so you should be up if you took that trade like 80 pips or so. So yeah, USD CAD was a 50 pip loss, but made it back on GBP Chef. We should be up around 80 pips. And with the structure of this, honestly, looks like a solid swing trade. Like the only thing that I have to wait out for is that news in the morning, that pound news for London session in the morning. That news is going to help dictate because it could push up. But let's just say, for example, if that news comes out positive and it pushes the market up, but on the smaller time frames, it's looking like the market is just pushing up the retrace to make a new lower high, then yeah, I'm looking to get in on this and take it back down lower. More than likely, these levels right here is where the market would have come to if we kept going lower. So back to the 4 hour. So if we did get a retracement, something maybe like this, and then head lower to that level right here. But now if the pound news comes out positive and it just wipes out all this bearish price action, then the market would overall need to first break above the 50 EMA and then break above 121 to take out these levels. So you have to be able to move quick, have quick decisions within the market, because sometimes even if you have a bearish bias, you can't fall in love with that sentiment, or else you're going to miss out on overall what the market is showing you. So don't get me wrong. Right now, my bias is overall bearish, but I clearly understand that if the market gives, like if news comes out in the market, prints a bullish engulfing, breaks above the 50 EMA, keeps showing signs of having a bullish reversal, then I'm just going to look at this instead of me looking like this was the breakout and this was the retest. Now I'm looking at it more so like this was the move from the bottom up, and then that would be the retest. Then if it pushed up, then you would know the market is pushing up towards 1.21 to 1.215, because that's where the levels of TP and the structure levels would reside at next to the upside. But overall, like I said, I'm more so bearish. I'm just giving you both both sides of what could happen, just so if I'm not on, you guys still know what to do. Because overall, like, yeah, we could call signals, but like if you guys aren't able to catch trades yourselves, then it's like I feel like I failed you as someone that's trying to teach, because that's really what the end goal should be. People trying to learn and being able to be self-sufficient for themselves. All right. And Cat Chef, I seen that. I haven't traded this pair in I don't know how long. Oh yeah, this is nasty. Um okay, so I'm on the weekly right here. It came down to a strong level of support around 0.68. You had a spike to the downside. Four of them actually. This these four all spiked to the downside before finally rounding out and pushing up. All right. So with that push up, you got to realize when the market came back down, it did find support. So as long as the market can stay above, what is it, 0.68, then you possibly could see a push to the upside. But I also see multiple wicks right here. And it's looking like the market is having trouble breaking above that 0.69 and 0.695 level. So if you, let me just go down to the daily, because the weekly, I don't really like how this looks too much. Um, for some reason, this thing looks like it can go up, but because we've been so bearish, like I would need to see if the market is trying to break above the 0.69 to 0.695 level, really. Only because I don't trade this pair too often, so I don't really know the ins and out of how it actually moves. Like, because with certain pairs, like I'm able to figure out, like, okay, it likes to move like this, or it likes to use these type of fake outs. With this type of pair, I would need to just see clearly it breaks some type of structure, then I could easily trade it. But in this case, um, the market could easily reject and push back down towards 0.68, or it could easily break above 0.69. So I would really just say, I mean, just trade what you see instead of trying to predict what the overall market is trying to do. And then try to like journal this, because you never know. Seeing a setup like this, if you journal it and you write down what's going on and keep track of what's going on, write down your overall bias and what you expect, and then after it plays out, if you update what happened, the next time something like this happens, you have some type of information to look back on. That way you could benefit in the future when the market makes some type of price, like some type of movement like this. That way you have some type of like history to like benefit off of. So that's what I like to do more so. So for like when the market pushed down to these levels, I would have been in heavy buys. But now where it's at right now, I just need to see a little bit more like of the market actually making its move before I say if it's an actual buy or a sell. But somebody else may see that it's a buy right now or a sell right now. It's really just all about what you're looking for within the market and what you like to trade. All right, so I went over a few pairs. I don't want to go over it too long because I still want to give a breakdown of the overall website that was launched yesterday, and then Brandon still has some pairs that he probably wants to go over. So real quick, I'm gonna just go to the website. So if you guys haven't already, the website is epicanalysis.com, and here you have the plans of pricing, testimonials. This is the member site for when you sign up. You come here. This is where you'll log in and have access to the back office. All right. Um, let me just go down on the site before I go to the back office. All right. So simplify your trading. We see this is pretty much showing us when we actually started trading. I mean, not started trading, but started the company. We started it in 2008, and we've been giving out free signals, free analysis, free content for over 2 years. So don't get me wrong, we could have been started, like an actual website and actual business, but we wanted to just give back and make sure that we were ready before we actually started, because a lot of people, they get started before they're ready. And like, this is why the forex industry has a bad name, because you have a lot of people that start before they're ready and lose people money or do this for people. And this is why, like, a lot of people look at forex like it's not real, because either people don't really know what they're doing and they already have companies. Like, how do you have a company you don't even know how to trade yet? So either that's it, or people are too attached to these MLMs. And don't get me wrong, like, MLMs is still good and all, but it's when people make it seem like they're killing the markets. In reality, they have sign-up money. Like, just be real with people. Like, if you're not really killing the markets, but you think forex is dope and people could learn, like, that's what you should tell them, instead of trying to make it seem like your sign-up money is you actually in the markets making and killing it. All right, so below that, you have the what is forex. This is for the people who are beginners, or for the people who don't really know too much about it. Because, like, when making a site, the hardest thing for, like, me was having that middle ground of people who have no idea about forex and still benefit from them, and then for the people who've been trading forex, have an idea but don't have that thing to actually click. So we had to kind of make videos for each person, to where somebody who doesn't know anything about forex can come in and learn, and then people who already understand forex can still sharpen up, like, their toolkit and learn a little bit more information. So within the site, we have different, of course, like, different tools, but we have over 50 videos of, like, educational content. And then we also have, like, modules for, like I said, people that are in the very beginning, who don't know what forex is, who don't understand, like, bids and ads, who don't know how to set up TradingView or link brokers to MT4s. Like, the modules would be more than likely for people who are brand new. But if you already have some type of experience, then you could just come to, like, the evolution course. So, all right, going to the back office. So if once you sign up, this is pretty much what it's going to look like. It's going to you'll see your account. So you'll see your account once you sign in, and then you scroll down. You have the introduction to Epic. This is me and Brandon. We just pretty much welcome everybody who's joined the actual company, looking and giving them pretty much insight on what to expect. And then this is what I was talking about with the modules. So the modules are pretty much for beginners. But even if you've been trading, but you still need to sharpen things up, I mean, you could just start from the beginning and just go through the whole course. You might as well. Like, why have all these videos accessible to you if you don't want to? You only want to watch the ones that you want to watch. That's like me. Like, that's like a basketball player only wanting to train the days that he want to train. Like, you gotta do things that you don't want to do to actually get what you don't have. You see what I mean? All right. So the module 3 is more so just basic intro to forex, terminology, bid-ask spreads, margin versus leverage, calculating pips. You have the module 4, that's like the getting started, how to set up broker accounts, linking brokers, setting up MT4 on mobile, how to set sell and buy limits, sell and buy stops, etc. And then we have an evolution course where we're trying to just more so train people's mindset to not, like, don't get me wrong, technical analysis are vital, but the mentality of how you look at the market and what you do throughout your day-to-day is going to more so be the reasoning of why you either make it or you don't make it within trading forex. So this is why we wanted to have something like this, because doing videos on just technical analysis is simple, but when you actually have something to, like, for mindset training and to get people to think differently, that's, when you start to see people actually make things for themselves. So after the evolution course, we still have more psychology type training. So this is where you'll see how to journal trades, how to have a set of trading plan, how to take our trading alerts, how to watch out for market manipulation, stop hunts, how to control your FOMO, which is fear of missing out. That when you see a signal and it's a pair you've been watching all day, and you're late on it, but you don't want to miss the trade, so you just enter it and disregard all the risk anyway. Like, you have to miss out on all that type of stuff. So we're talking about that. We're talking about staying away from greed. We're talking about the cycle of the overall trader, how you have to deal with winning streaks, losing streaks. And then below that, it's going to be the actual Epic course. So this is going to be the actual technical analysis content. So here you have, of course, how to draw support and resistance, supply and demand, price action, Fibonacci, trading trends, trading with structure, identifying like candlesticks, trading candlestick patterns, reversal patterns, how to find entries, how to exit, where to exit the market. Like it's a bunch of different things. So to where we don't want it to just like be focused primarily on one specific trader. So depending on what you use, we have videos for multiple different like tools. That way it's like it reaches a variety of different people and not just focus on like a small amount of people. All right, so that's that. It's over. Like I said, this has multiple different videos, over probably 30, 35 of these videos right here. And then that'll be pretty much the end of the course. And always keep in mind that, you know, we're always going to update different videos, update new lessons within the course. So it's not just because you see what's here now doesn't mean that all these videos are going to always just be here, or doesn't mean that we won't update new videos with new content. So I just wanted to give a basic rundown of what to expect and what you're getting with the overall website. That way you're not too lost with what's going on. All right. Let me see. Can you show a little of that as an example? What do you mean? And is there also a mentorship component to it? So I mean, right now, like because we're just starting off, like we're a lot more flexible to actually help people because we just now starting off. So you're going to be able to like get our responses a lot quicker. So it's not an actual one-on-one mentorship, but it is like a hands-on mentorship because we're able to actually interact so often with our actual members. But now later on, we will have like a mentorship actual plan to where if you want to just skip most of the things that you just want to if you just want to skip and you just want one-on-one training from me or Brandon or both of us, we will have that added. It's just, you know, like when you're just starting a company or starting a business, you got to start and take what you can get and then just work your way up. I didn't want to just have multiple different like plans and this and that right when we started. I kind of wanted to start off small, start off with something to where we can sustain and then gradually grow over time. All right. So, yeah, pretty much that's the gist of it. Let me see. Yeah, they already went over too long. So, yeah, that's pretty much it. I'm going to pass this over to Brandon so he could give his breakdown of the pairs that he's looking at. And yeah, yep, I see you, Brandon. All right, yeah, so yeah, you can hop on. I'm about to stop sharing now. So, yeah, thank you guys. Thank you, everyone, for supporting throughout the Telegram, throughout the site and all. And hopefully we'll see you guys within the site so we can actually start hopping on webinars together more so. All right, yep, you ready, Brendan?
Oh, yes, sir.
All right.
What's going on, everybody? Solid breakdown by Ryan. I'm gonna just cover a few pairs that I was looking at. So, for example, well, let's start with AU since I gave that out. Overall, I'm bearish on all across the board, Australian dollar. You can see, I mean, if you're looking at here, I'm looking at AU on the daily. Even if you look at the weekly, you can clearly see we've been in the downtrend, right? Price is clearly making these lower lows and lower highs structures. We had this big impulse break. This is the lowest price probably has been in probably over about a decade. So if you see how this weekly candle closed, it pushed right up into this bearish order structure here, where you had that previous breakout. You know, some call it a bearish order block, you know, but this was like the start of the big bearish sell-off. So if you look at this weekly candle, it closed as a shooting star. You see that strong wick. You know, the candlestick closed like that. That's important. Candlesticks tells you a lot, especially when it's on a higher time frame. So we got a shooting star rejection from this level, and then you break down to the daily, price started breaking down. So, I mean, looking at this on the daily, yeah, it has been creating these higher lows and higher highs. So this is that's why it's important to understand the overall trend on the higher time frame, because, you still can catch these moves, but this is really still corrective. As long as price stay below here, really, you're really still in the downtrend. So this is what I'm looking at, a potential. Now, I gave this out. I did tell you guys to put your stop loss at break even if you entered that trade, only because I knew some fundamentals was coming out, but you still can look for re-entries if it goes back up there to the entry. It hasn't just yet. But seeing this, you can even take a trend line from here, this lower high structure, across. You see price had a nice break back below. So I also will take a counter trend line. I will take a counter trend line from here, this low, connected here to this higher low structure. So we had the impulse. So this was the impulse. This is our strong impulsive breakout. Price pulled back, gave you a nice retest of structure. Also rejecting off the 50 EMA. Also, if we take a look at how the daily candle closed, this is also a shooting star candle right here, or like a pin bar rejection, right? Then you had this nice bearish close. So really, as long as price stayed below these structure highs, this was the high on the 5th. It came back on the 6th, retested it, and dropped down. As long as it stayed below here, I'm still bearish. Now, of course, we would need price to break this support level. That's why I told you guys put your stop loss at break even, because right now it looks like it's going to pull back. It's pulling back before any possible continuation. So this is something that I will look at here. You could take a trend line right there. See if price want to hold below this previous lower high structure, right? But all in all, if it stay under this high, then we can see it break out. Once it breaks this support, you can look for pullback continuations. This really can be a nice move to the downside, depending on, because also like, going fundamentally with the Australian dollar, with the New Zealand dollar, with China, and these trade wars. Australia and New Zealand are big two-way trade partners with China, so they're under a lot of pressure right now. So overall, you'll see the Australian dollar pairs, made some nice bearish moves last week. Another pair I'm looking at is GBP NZD. On the last session, I actually gave this out. It actually, it already played out. If you see here on the daily, wait, where's looking for my. So really, right here, price was making these lower highs. Then it came to this resistance supply-like structure, and it kept respecting. All right, so when price came right here, I actually was selling it. I was selling it on this bearish engulfing. Found resistance. I was expecting it to come back at least back to this level of support around 205. So we broke through that now. Right here, this is actually like a Morningstar reversal type candle. So price could potentially reverse. And I think if price reverse here, it will have something to do with the New Zealand dollar, because I'm looking on the 4-hour now, and you see we're at this level of support where price had nice rejections before. All right, the price did come down here and break that structure. So really, overall, GBP NZD, I mean, really is setting up for a nice move to the downside, because I'm looking at this from a higher perspective on this weekly when you had this nice sell-off from the supply level. So any buy, I believe, is just going to be a correction. All right. So if we look at the 4-hour, it basically just printed this. It just printed this Morningstar right here. This is a bullish, could be a potential bullish indication. All right. And the only reason why GBP NZD is it could still be 50-50 is because GBP overall is under pressure. So the weakness of the pound could outweigh the weakness of the New Zealand dollar. But all we got to do is just react to what price shows us. So really, if price gives another impulsive close back above here and then pulls back and finds support, then you could look for potential buys, back up to these levels of resistance. All right. But a pair that I like more than GBP NZD, that's another NZD pair, is NZD CHF. Wait. NZD CHF. This actually looks similar to CAD CHF. Like if you look at a lot of the CHF pairs for the most part, like they're all making similar type patterns. So you can see here, well, I'm clearly on this downtrend right here. Clearly been making these lower highs and lower lows, right? We broke through this big level right here, this big level of support. So after seeing something like this, the next structure point that I would pay attention to is when price comes back and retests the same structure. If it shows me signs of it finding resistance, like certain bearish reversal candlesticks, then I would be looking for potential sales for continuation. So if you look at how this weekly candle closed, it closed a shooting star. This is a shooting star. You see this strong wick rejecting off that level. That could be an indication that we're potentially going to see the sellers come in and push price back down. All right, that could be what it's indicating. So if you look at it on a daily, on a daily, it basically started rolling over. It gave us the breakout of this zone. So now after this breakout or after this impulse right here, this was the impulsive move right back below this level of resistance, right? After price broke back under there, right, I would have been looking, this is the structure point I would pay attention to. I would have wanted it to come back and retest this same level of resistance and find resistance and then look for a potential sell. So you see here, it printed this shooting star, and then you got this strong bearish engulfing here on the 4 hour, right? So it found resistance basically forming this double top right here. This was May 5th, this was May 6th on the right shoulder, then it broke out. All right, also breaking out of my counter trend line. So really, let's see how the daily closed. The daily, okay, that's like an inside bar. So as long as price holds here, because normally if I see a double top, I like to see price come back and retest the neckline, which is like around here, right? Which it pretty much just did. And as long as NZD stay under pressure, right? Like we're still under my 50 EMA, got my moving average crossing over the 1 hour, 2 hour, right? So that's a good sign that the bears could be looking to push this lower. So I would say look for potential sales on this. Me personally, I'm actually in a sell on this. My stop loss above here. You see here on the 1 hour, we just got a shooting star rejection from the neckline, right? So you really just watch price action at structure points. You know, so I'm expecting something like this, price to continue to roll over. You know, now it could have a deeper pullback, but as long as it stays below this double top, then my bias is that we're going to see an extended wave back down to these lows. My first target will be around 0.58. UCAD, okay. All right, so that's NZD Chef. I'm leaning towards the bears on that. Also, NZD USD. Actually, let me look at UCAD since that's the one you just asked for. Let me check UCAD real quick. Wait. So looking at UCAD, I was actually expecting bulls to come in down here. So really looking at UCAD here on the daily, you know, like we caught the nice drop from this supply zone up here, right? Price had a nice drop from that level of supply. And then it came right back down to this price point, formed this bullish engulfing breakout, came right back down, found support, and pumped again. So right now, I'm bearish on CAD right now. So this is just an instrument. I mean, this is an interesting level for USD CAD though. So it's really approaching breaker bounce areas of price. So really right now it's looking like it's setting up for another correction. So you got to be careful trading this week because it is NFP. So a lot of what UCAD is going to do has to do with what oil is going to do. And oil is setting up. It's looking like that's actually the one I want to look at. Oil is potentially setting up for a sell-off. And if that happens, I definitely will be leaning for, UCAD to hold this double bottom. Because as long as it holds above these support levels, we could see a breakout. And then if it breaks out of this structure and it gives you another pullback and find support, you could be looking for continuations, probably back up to these levels of supply. All right. So right now, I would sit on my hands with this, unless you know how to trade this, and you probably can, it's looking like it's setting up to correct. But really, when it gave us breakout, it pulled back here for a higher low. You could have been looking for buys here, because it had that impulse, and then it gave you a bullish flag right here. Right? You sell to break out of flags, but that would have been short-lived because you're back at this level of resistance. So I'm gonna look at oil so we can kind of get EU. The EU was a nice trade. I'm gonna look at oil. Also, right here, it's just printed these bearish. This is like a bearish railroad right here. It's only on the 2 hour, but I believe UCAD is setting up probably to have another drop. I would like to see if it want to hold above this higher low. All right, because if it breaks below here, then it's probably going to come back and retest these lows. All right, but it would need to break this structure. So real quick, I just want to look at oil real quick. So looking at oil, we all saw what happened to oil, past few weeks out, huge sell-offs. So price rolled over and it came. Right now, we're back at this previous sell-off level of supply. All right, where this is where the previous impulse started from. So at these structure points, you're looking at price. How is price reacting? What is price telling me? I mean, last time it was here, it gave you this big bearish engulfing before it sold off. So price came up here again, and look, this breakout candle closed bearish engulfing below this level of resistance. So as of now, it's looking like it's setting up potentially for a drop. I would just need price to hold below here. All right, this is actually an evening star candlestick right here on the 2 hour, which is a bearish reversal. After the evening star, boom, price broke out. So really, on these pullbacks, I would say look to sell the breakout of a flag. Right now, it's just correcting itself. This is a potential double top, right? So it's pulling back around this neckline of the double top. So if we see a strong move, and this is a move where you're going to see something happen with the CAD and with oil because it is NFP. So it's a lot of fundamentals for the CAD. So I would say sell this breakout, sell this flag, because it's looking like right now it's just moving corrective. So I would say, just let it correct itself. Once it start breaking out, you can start looking for sales, if you trade oil, because I'm leaning towards this correcting and then breaking out of that flag. EuroCAD, yeah, I was looking at that earlier. Okay, EU, let me take it. I'm gonna look at EU, then UJ. EU, man, remember we was talking about that, Linus. That was a nice sell to start the week. So now EU is at an interesting point because EU came up. I don't know if I sent this out. I thought I did. I meant to, but really it came up to the same psychological level around 1.10. It spiked through this level. After seeing it spike through, I was leaning towards sales. This is how last week ended. All right. And then it started off on Sunday just straight dropping. So it found resistance. After seeing this breakout candle below structure, that would have been all the signs I need to see because it already gave me this pin bar through this level, right? And then gave me a breakout right back below this level of resistance. So that's a sign for me that, okay, the bears are in control right here. And look what it did. It came all the way back to the same level of support, right? So now this could potentially be an inverted. Like what EU does right here has a lot to do with what the dollar is about to set up and do. And right now the dollar had, a reason why this was selling off as well is because the dollar was pumping. Like the dollar was seen as a safe haven this week with all this going on. So this could potentially be a left shoulder. It could potentially be a head. The price holds and finds support here. This could potentially be the right shoulder to give us a move to the upside. So as long as this support hold, I would say we're probably going back up. Looking at the daily, but You know, because look, we're back at this nice level of demand. We had this big pump, right? So in order for me to buy here, I need to see similar type price action candles. I need to see bullish engulfings, bullish pin bars like this. You know what I mean? I need to see, you know, strong rejection. So it's showing signs right now. Price seem like it's losing steam, you know, printing these rejection candles. If you get a strong breakout candle, you're right, maybe price pull back. Sometimes it'll give you an impulse. So some of the safer ways to enter trades is just understanding that price is just made up of impulses and corrections. So once you get a strong move, you know, this is a part of FOMO. It's like some people fear they're gonna miss out. Sure, it will be great to have an entry right now here before it pump, but you don't want to get too caught up chasing tops and bottoms. So wait for, you know, any type of candlestick reversal that, you know, that you like to see, or wait for some type of impulse, a strong move up, and then catch a pullback. Catch a pullback, you know, trade the bullish flag. So right here, I would say, you know, I would be patient because it's NFP. All right. But you want to see candlesticks like this, right? Nice bullish morning stars or bullish engulfings, right? It was a bullish engulfing right here, broke back above this level, retested it with another bullish engulfing. That's all the signs I need to see that, okay, this was just a false breakout. We're going back to the upside. So you want to see something like that. All right, perfect. All right, so UJ, ECAT, let me take a look at UJ. Yeah, you see, I was actually looking for sales on UJ overall, but UJ is now at an interesting, let's take a look at the weekly. So, wait, I'm pretty sure I had a markup on this. Different. Oops. All right, yeah, so UJ is coming around interesting levels, you know, so you do have to be careful because, you know, it is, this is a level of demand I would pay attention to for the next potential level that it can reach. So let's look at where we're at on the daily. So price been downtrending, right? And it just broke this level of support. So until it shows me anything otherwise, also JPY is extremely bearish right now. I mean, extremely bullish. You know, when you got a lot of uncertainties going on, this virus, all these different things, you know, that's a big reason why EJ is selling off. Euro Jappy is UJ's been selling off. GBP JPY is selling off. If you look at pretty much all JPY pairs right now, JPY strength came in. So that's a part of understanding what's going on fundamentally, and also just looking at the technicals. So now that I know that, you know, it's a lot of safe haven strength right now with JPY, and UJ just broke this level of support right here. It just broke this level. So I believe any pullbacks could be potentially more sales to take price back down towards 105. Now, this is what I like to see when I'm trading in line with structure. Okay, you had this high here. This is pretty much a lower high. This was lower high structure. It was ranging right here before it broke this support, right? It came back, retested it. Like it pulled up a little higher though. It didn't reject right off resistance, but it came up, then it wicked away, right? Closed right back below here. And then it formed a new lower low. It formed a lower low right here, formed a lower high right here. This is another lower low. So now I will be leaning towards price to come back up. We'll look for it to find resistance either right at this support structure or maybe a little higher. But as long as it stays below, this structure around 107, I'm still bearish. All right, but just be careful because it is NFP week. But I'm definitely leaning towards this to just pull back. So what I would say, a way you can trade this is you could take your counter trend line and just let it correct. You know what I mean? Because right now, even if you look on the smaller time frames, you could easily, even if I'm on a 30-minute, I already know the true direction. Like the 1 hour, you could clearly easily see these structure points. You can easily see these flags as well. So you see how price correct, breakout, impulse, correction, impulse. So you look to trade these flags, these pullback structures. That's what you're looking to trade. You got one right here. And then it broke out. So I would say look at this the same way. You know, let it correct itself. You can take your counter trend line. let it correct itself, and look to sell the breakdown down lower. All right, because even looking at this price point, this is the lower high, so it could stay below there and then just go. All right, but overall, I wouldn't be surprised if it pushed up a little higher, something like this. So let it correct. Once it starts to show its signs of closing nicely back below, look to take it down lower. USD CAD, Euro CAD. Let me look at Euro CAD. Yeah, you know what? Let me see. I was actually looking at potential buys. So if you look at all of these, like a lot of these CAD pairs, also going in line with oil. If oil really sells off up there, which it looked like it could potentially do, and oil is still very much so in a downtrend, you're going to see pairs like this pump. It's likely that this pair can, it already started pumping. So let's see what we see here. So you see this level of support, right? So okay, look at this structure. Let's look at this on a daily. So price is retesting. It retested an interesting point of structure. If you're looking at this on a daily, it retested this previous level that was a nice supply zone or a nice resistance level. You see that? It was sales, a lot of liquidity right here, where you had a lot of selling pressure in the past. That's why you always look left to go right. And look what price did. It came right back to this level. So it bounced, came back again, broke below a little bit, and then this daily candle closed bullish and go for it. That's a sign that, especially at these structure levels like this, that's a sign that the buyers are taking control. So price gave you an impulse, and then it pulled right back down again. Now it formed this little bullish rejection candle. All right. So as long as price finds support here, I'm bullish. And I'm gonna show you how you can look at this. Do I wait to enter on the close of a breakout close candle or a close of a retest candle on the flags? Honestly, it depends. Typically, I would like to see a retest. But if I'm trading in line with structure and I clearly see the lower high and I clearly see it's just retesting this structure point, like I'll enter on the retest. I like to wait for the impulse, then the pullback. And on that pullback, I'll factor in my entry. So EuroCAD, we could potentially, so look at this structure right here. I don't know if that answered your question, Ashley, but that's definitely in the training as well. Like I showed how I trade like certain flags and certain breakouts, but for the most part, I can enter at these levels. I don't always wait for the impulse. If I see certain candlestick patterns like this, bullish pin bars, bullish rejections at a level of support, I'm looking to enter. So price came down here, closed below. It was just a false breakout. Gave you a bullish engulfing, then had this big bullish pump right back into the level. All right. So it impulsively closed above this level of resistance, right? Forming at a higher high slightly, but then it pulled right back down. All right. So look at us on the 4 hour. This 4 hour formed this bullish engulfing. Okay. So we could potentially be, and if I'm trading in line with this structure point and I'm looking for the next move, I will have like a counter trend line, something like this. And once I get a breakout, sometimes I would trade right, like really could have entered right here on this breakout candle, stop loss below, right? Like that's the way that I enter on these counter trend lines when I see the breakout and we have the structure point, I'll enter there. Plus my blue is crossing over my red. That's something I use for confluence. And we had this nice level of support. So really, as long as price stay, and here on the 2 hour, you got a Morningstar reversal candlestick. All right. So I'm seeing all the signs of potential reversals. Okay. So as long as price stay below here or above here, then I will be looking for buys. But we could potentially see a deeper pullback before price making another move to the upside. But a lot of it has to do with what CAD is going to do, or price could stay above this 50 EMA. Like I wouldn't be surprised if price stayed above, so all you can do is just trade what you see. Trade based off of what you're comfortable seeing. You know, I can take a little channel right here. And once price breaks out of this, you can look for buys there, you know, because right now it's just ranging. This is just ranging. I'm setting up for the next move. So if price was to break out of this, you could enter, you could put like your stop loss below, maybe below the 50 EMA or below that channel or that flag. Once it shows you a nice impulsive breakout, and then my next level of resistance will be up here. All right. But if it breaks down out of this, then, you know, let it correct, and let it find support to see if your bias is still valid. But it's important to understand both, you know, both biases and what could potentially happen. Right. Yeah, exactly. It depends on structure, depends on price action for sure. So another all pair, actually, 1 second. Another all pair, all Jappy. I think this could be. So I remember I sent this out. I was looking for price to pull back deeper, but it's made its breakout a little sooner. So you can clearly see here, it was making these lower highs and lower lows, right? And it had a nice breakout of this structure, broke below this low. So when I see that, when price comes back and retests this structure point, I'm looking for price to, you know, give me bearish rejection signs, you know, that it want to find resistance and just reject. Because when a strong level of support is broken or demand is broken, it becomes resistance or supply once you see price action form. So if you look at how this weekly candle closed, this was pretty much a bearish pin bar, or you could call it, you know, it's kind of like a gravestone doji, you know. So that's definitely, when you see strong wicks to the upside, you know, that's signs of, you know, sellers are coming in. Go down to the daily, and boom, price broke out, strong bearish breakout. And so I like this one. Not only do I like this pair fundamentally right now, because what's going on with all, so the technicals is lining up also with what I know that's going on fundamentally, like with all the economical stuff. So you see right here, this was the impulse. So similar to how this broke out and then it came back and broke out of this structure, that's really what we need to see with all USD. So you see how it just broke the support? We need all USD to do the same thing. All right, and that definitely could be a sign. So when I see a structure like this broken of support, typically, if I'm not in that trade, I would look for price to come back and retest that, right? Which is doing right now. But you got these, this is the high of this drop, and then you forming these lower high structures, right? So if price was to find resistance and give me nice rejection here, then I could look for sales, and my stop loss will likely be above this previous lower high. You know, if I see the type of rejection I like to see. Okay, my next point of target, but really the risk reward got to be worth it. You know what I mean? Typically, ideally, I would have loved to see price have came back and retest this resistance, but it didn't do that. It started dropping before that. All right, it basically retested this resistance point. Right, so you just paying attention to structure. Yeah, so all Jappy, definitely still bearish. Right now, I believe we're just in the corrective phase for price to continue. All right, so I would say let it correct. You know, I would like to see how, you know, maybe the next couple 4-hour candles close, because, you know, it could probably pull back a little deeper. But as long as it stays below here, you know, you see it came up there, gave you a shooting star reversal candlestick right at this level of resistance on a pullback. That's the top patterns I'm looking for. Shooting stars, bearish engulfings, you know, certain reversal candlestick indication that, you know, we looking to continue. All right. One more, I think I got one more pair, Euro NZD. And if you guys don't have any other questions, but Euro NZD is similar to what I was looking at with GBP NZD. But you can see this could be a potential inverted head and shoulders. It's not your ideal because this would be like one big left shoulder but all of these are the same level of price. Support, price extended down, then had a nice bullish impulse above it. So it came right back to the same level of support, and they gave you this nice bullish engulfing right here, which also can be considered a morning star, depending on how you look at it. But for the most part, it's a bullish engulfing. All right. So it's showing signs that price is finding support. So now it's the same thing. You can take your counter trend line take your counter trend line. You're looking to trade that breakout. You could have been entering here, or my moving average actually started crossing over slightly before this breakout. If I'm seeing that, that can be a sign that we're looking to reverse. Also, this was the low. It came back and retested this low and held, and then it pumped out. All right. So if I'm not in the breakout, I would like to see some type of retest, which is slightly pulled back. It is some NZD news coming out in like another hour and a half, I think. So that's definitely going to have an impact. We see it broke above this 50 EMA, and now it's finding support here. So it could potentially hold above that and just give you another up move. So I'm leaning towards this to have another push up back towards these levels of resistance up here, as long as it holds above this structure right here. But right now it's showing all the signs that it's going to give you that move. Plus it goes in line with the weak NZD, which is what it's looking like. All right. So anybody have any questions? If not, I think that's the last pair I was going to check out. I don't know if I'm missing something. Let me see. Yeah, all CHF, same thing. All of these all pairs is doing similar. This was the bearish order of the big sell-off. Came up here, printed a bearish engulfing. Seeing that, I would have been confident that this is about to drop. Bearish engulfing at the same price point. Slightly pulled above it, and then gave you the bearish engulfing. So it gave you that impulsive breakout. Price formed this double top, similar to like NZD Chef. So as long as price stay below here, it could potentially be getting ready to roll over. Right now, it's just retesting this neckline of this double top a bit, right? So once price starts to find resistance, you can look to sell that down. All right. So let me see. Did I miss any? All right. So that's pretty much it. Unless you guys had any other pairs you want to check out, any